Okay guys, in this video we're going to be taking another look at Bitcoin, but we're going to be taking a slightly different approach. We're not going to be doing too much technical analysis. Instead, I'm going to take you through a bit of a journey on what we are seeing with various different news outlets, spreading various different opinions and perspectives on Bitcoin, and we're going to try to sort the fact from fiction. So guys, as we get into this video, if you find it useful and informative, hit the like button. I really appreciate that. If you're new and you want to stay up to date, make sure you've subscribed, tap the bell, hit on all notifications, and you won't miss another update for Bitcoin. This video is sponsored by Crypto.com, the world's fastest growing crypto app. With Crypto.com, you can buy that fear and sell your cryptocurrency. You can of course earn a juicy return on your investment and spend your cryptocurrency via their debit card. You can track all your transactions, and of course we cannot forget their new NFT platform. So why not check out Crypto.com? Link is down in the description below and you will get a $25 sign up bonus. Let's see what's going on, right? So the first thing I just want to kind of talk about very briefly is what we're talking about yesterday's stream, was a downward trend and an upward trend. Okay, so we can see this just here. This is the daily chart for Bitcoin. We can obviously see this kind of downward trend started on the 15th of June. We can see that it's actually got tapped on now 4 times. We came up to this trend line yesterday and we pulled back from it. Now we have an upward trend as well. This starts from the 22nd of June. We've had 3 taps on here consecutively on the 8th and the 9th of July. So right now this looks like an interesting triangular wedge forming, which means that we'll probably have a breakdown or a break up to the upside no later than the 14th of July. So monitoring that situation, whether or not we are likely to get this push to the upside, again in line with our price target expectation here, or whether or not we're going to go down a little bit lower. And obviously loads of people in the space speculating at 20k Bitcoin or 25k Bitcoin, 28k Bitcoin, whatever it may be, right? Ultimately, we're going to be watching this quite carefully. No one knows for certain whether it's going to go down lower or whether it's going to go higher. We obviously rely on patterns. The expectations were that it would actually go up to about 40k before we have a pullback, 42 before a major pullback, and then this key area here where the institutions make the assumption, or make the decision, I should say, to push the price of Bitcoin up higher or to push it down lower. There is no guarantee of a spring event. There is no guarantee dropping it lower than we've already seen over here about what is that, about 28.5k. So ultimately, yeah, the expectations right now are to really watch this triangular wedge, how this forms, and whether or not we're going to be lining up for a break up to the upside or a breakdown to the downside. And we'll know shortly when we get into those other technicals. But we'll do that on a different video, guys. We'll probably cover that after the weekend on Monday. So do stick around for that one. But what I'm going to talk to you guys today all about is the sentiment, right? So I'm just going to briefly show you this and then go into some facts rather than fiction. Here we obviously have a generalized fear and greed index, right? They use the Bitcoin icon there to really indicate it, to show you that sentiment analysis. Ultimately, you should be extremely fearful, right? According to this, basically, and the market's in extreme fear. It has been extreme fear last month, extreme fear last week, it was extreme fear yesterday, and right now it's extreme fear. So if you're not scared, you should be. That's ultimately what we're seeing here in this. However, if you actually signed up to advice.io and you use the artificial intelligence and take a look at Bitcoin, well, then you get a B3 rating, i.e. there's not a lot of fear for Bitcoin. So we now obviously have a generalized fear and greed index saying you should be incredibly fearful. And then we have artificial intelligence saying, yeah, there's not that much fear. It's B3. It could be better. It could be up there like B1 or A3. But it's no C3 or a rating of D, right? It's slap bang in the middle. It's the, meh, we're okay. We're not doing too bad. So that's really interesting to me. It's interesting because obviously it is vastly different to that of what you're seeing from a generalized fear and greed index. And that's an important thing to understand. When you have an unbiased approach, just pure data, and what it is telling us, it's saying that actually there isn't that much fear, not as much fear as we are being told that there is when it comes to Bitcoin. So I really wanted to kind of just flag that to you guys, and I do recommend, encourage everyone to sign up to advice.io. It is free and you'll be able to get access to Bitcoin to see exactly what's going on. Now, obviously, the A1 rating down here, the best it can be for profitability, the return on investment is doing really well, but there is a rating of D for the liquidity, okay? So we know there's liquidity issues. We know that the moving averages haven't been the best. The peak end value demand is up there at C2, and the Sharpe ratio is indicating a potential issue. Now, obviously, we are closing the gap on the 50-day average, so I'm monitoring that. So again, I feel this is going to turn really, really quickly. So obviously, knowing that we are in this triangular wedge and we are going to be working our way down here in the next few days, and we're being told that there's a lot of fear, but actually there isn't that much fear according to the artificial intelligence and machine learning. So at least we understand that, right? So let's get into the next thing that I saw that I thought was really interesting, worth kind of bringing up for you guys, which was this, right? So an investing guru predicts $10,000 Bitcoin. Okay, so we've obviously heard, 28K, 25K, 20K, and 15K's even come up, but 10K is basically where this guy thinks Bitcoin's going, and you should avoid it, right? So ultimately, he's trying to stir, or at least the opinion here is trying to basically push the price of Bitcoin down lower, potentially for these institutions to mop the floor with anyone who is susceptible to the fear and is selling their Bitcoin at cheaper rates. So ultimately, what you see here is basically this guy is calling out a 10K Bitcoin as the Apple founder, 𝗕𝗘𝗪𝗔𝗥𝗘, says he doesn't own Bitcoin, which he fine. He doesn't have to own Bitcoin. I don't know why that he would say that that is going to cause that. But anyway, nonetheless, Wall Street titan 𝗕𝗘𝗪𝗔𝗥𝗘 basically has advised against purchasing Bitcoin at current prices, predicting that it will crash down to $10,000. Now, if it crashes down to $10,000, I mean, there's going to be some serious buying pressure on that way down there. I don't think it's ever going to go back down to 10K. So, yeah. It is what it is. It's just laughable at this point, to be honest. So Apple co-founder 𝗕𝗘𝗪𝗔𝗥𝗘 has touted Bitcoin as a miracle, right? So he says it's a miracle. But he says he doesn't own any himself, which is fine. You don't have to own anything, but you can definitely appreciate what Bitcoin is doing. I'm not going to go into the article. I will link it into the description if anyone's interested. But this is just a load of nonsense, in my opinion. And obviously, we go on to the next thing that I wanted to talk about, which was Bitcoin SV deposits suspended on exchanges post-attack. And here's what experts have to say. So the Bitcoin Association has said that it will integrate legal action against the attackers for the double spends attacks. So basically, earlier this week, in a recent illegal block reorganization, the Bitcoin Satoshi version of BSV network was under attack, and the Bitcoin SV network remains vulnerable to double spends as the network remains unstable. So basically, that's all that is about. Now currently suspended on several crypto exchanges as a result. So it's interesting. I thought it was worth bringing up. Again, I will link this in if you really want to kind of get into that and to see exactly what's going on. Now, the other thing that I wanted to talk about was this one, right? So obviously we've had someone saying that we're going to drop down to 10K. Extreme fear, right? Extreme fear. We're going down to 10K. And then we get this, right? Bitcoin cycle will last 1,000 days, one analyst says, as crypto rallies despite the 40% volume drop. Okay, so basically Bitcoin is staging a comeback this weekend after ending the week testing at the 32K support. As Bitcoin approaches 34K, two analysts share their views on key levels that investors should watch out for in the coming weeks. So starting from Thursday, Bitcoin seemed to break downwards as it slipped from a weekly high of 35K, wiping out basically 2K in a matter of hours. The digital assets found support just above the 32K range, and obviously, there was little development in the wider market to explain the sudden crash. Ultimately, you saw a significant volume, basically pushing the volume down. We spoke about this when we saw it happen, and it was a very unexpected move. It wasn't something that was actually required, and it was basically a significant volume that was basically dropped in order to push the price down lower. That was the only thing I could see in the technical data that actually suggested that there was going to be something to understand as to why there was a significant pullback. That was the only thing I could see. Now, obviously, over the weekend, Bitcoin's all-crucial support set at about 32K helped it stage a comeback. And at the time press of this particular article, Bitcoin is trading above 33K. And obviously, we can jump back over to our chart here. We can see that Bitcoin is currently trading at 33,700. So although it's a red day, it has had a significant comeback from here, but it has found that resistance level today, as we spoke about earlier, forming this triangular wedge. So we're really cautious on what's going on there. So again, this is quite positive news, right? We're talking about it potentially lasting up to 1,000 days, which again takes us to where our expectations are, right towards the end of the year, heading out towards Q4, all of that kind of good stuff. So and nothing has fundamentally changed from year on year or cycle on cycle, and I think ultimately we're looking for some interesting stuff to kind of continue. Now, ultimately, we are still in what I believe to be an accumulation, although that does seem to be slipping by ever so slightly. It seems that we're less likely to keep seeing these Wyckoff patterns form. I think ultimately too many people are aware of them now, that we are potentially going into something different. So really crucial to see what happens by the 14th of July, whether or not a breakdown or a breakup actually happens. If a breakup happens, that puts it more in line with my expectations of the Wyckoff accumulation, although we are basically hanging by a thread at this point. If, however, there's a breakdown and we actually drop down lower than our secondary test in phase B, then it's definitely not looking like a Wyckoff accumulation pattern. And in fact, we should probably scrap that idea and that concept altogether and move on to something different and obviously see what else we can see within the data. So really interesting stuff that is going on here. And the last one I wanted to kind of just talk to you all about was how Bitcoin to resume the bull run in the second half of the year. Again, this is something that we've been talking about for a very long time. Obviously, a fourth wave correction was due. Nothing moves up forever, and we are in 5 impulse waves to the upside as per Elliott theory. So obviously the second half of this year was obviously going to be a fantastic run for Bitcoin. It puts Bitcoin's current price prediction out there towards that 180 to 200k range. It's a significant portion for Bitcoin, and it has significant impacts for the rest of the market as well. So here, according to Bloomberg Intelligence Report, the second half of the year is going to be a fantastic year for Bitcoin. So according to the new Bloomberg Intelligence Report, the BI report, Bitcoin is on the verge of resuming its bull run, with its resurgence tipped to be massive. So in another report, Bitcoin is said to benefit from central bank asset purchases program, which may cause inflationary pressure. So really interesting to see how this all plays out. Again, I'm not going to read through this entire document, guys. I will link all of these into the description so you guys can have a look at them and obviously read them all and understand what they're all talking about. But guys, I really wanted to just kind of do this video to keep you all up to date with how what I can see happening here with Bitcoin. Our chart is obviously very interesting. We're at a crucial point where we're going to see a breakup or a breakdown. Ultimately, what we're looking for is actually some short-term pain for some long-term gain. So ultimately, if we have a red day today, a red day tomorrow, come Monday, I think it's going to be an absolutely explosive motion to the upside that could see Bitcoin really testing up those higher areas on the charts. Major kind of resistance areas that we'll be looking to break will be that 35, 36k, then obviously followed by 38 into the 40k range. Now, I do anticipate that would be rejected from about 40k. Before potentially retesting 42. 42 is an absolute crucial area for Bitcoin. We have to see Bitcoin surpass and close above 42k, and doing that does signal that we'll be moving way out of this Wyckoff accumulation nonsense and into some pretty decent price discovery again for Bitcoin. So guys, hopefully you have found this update on Bitcoin useful and informative. Hopefully it helps steer you away from some of the nonsense and the fiction from the facts. Ultimately, I'm always data led, and when we take a look at the artificial intelligence, it's telling us a very different story to what some of these articles are talking about and to what some of these generalized indicators are telling us about. There's not extreme fear for Bitcoin right now. It's actually pretty good. 𝗖𝗢 has been bang on correct on so many occasions that I do encourage you guys to sign up and check it out, because for a free platform that is offering that powerful content, it's absolutely worth checking it out. Guys, if you found it useful, hit the like button. I really appreciate that. If you're new, make sure you've subscribed. By subscribing, you'll be kept up to date. Tap the bell, hit on the all notifications, and you won't miss a single video. Guys, with that said, I'll catch you in the next one.